I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week. Hopefully, lots of great ideas and opportunities for you throughout the show. So the stock market makes it 9 out of 10 as 2018 opens explosively. Buyers have come in basically nonstop, with even the one down day that we saw this week, seeing 5 out of 7 trading hours moving to the upside. It's just relentless buying that we have seen. And the buying is spreading all across the investment spectrum in the markets, as small caps are just leading the way, and micro caps have been big drivers in the market. If you look at the IWC index, just amazing strength in those tiny little companies. You always have to put things in question when they're buying the junk, you know, that you're nearer the end than you are the beginning of a big bull move like this. But we know that as the market is just, you know, coming to the end of its 9th year of this bull market. Even as the threat of China that they may change their policy of buying U.S. treasuries, and even the threat that we may have a government shutdown as we run into debt ceiling issues, and even as bonds collapse, all of those because of the ridiculous spending that our government does and gives the power to China and builds the huge amount of debt that brings us to these debt ceiling issues, and all of that, and even President Trump's filterless rhetoric that we see out there, none of that can stop this market from accelerating down this track as it moves in just a stronger and stronger fashion. Of course, when a train is moving down the track, a curve will come, and before you know it, if something doesn't happen to adjust the speed that this is moving up or get some modest corrections, there will be a train wreck. So that's what we're seeing in here, is a market that is, you know, really explosive to the upside. Let's take a look at our 60-minute chart of the S&P 500, and you will see in here that we have had another week where it is every day basically moving sharply to the upside. We'll take a look at what the news items were that moved it up this week. The gray area you could see here Sunday overnight and the Monday morning saw some selling pressure coming in, but the techs start to jump and save the market from a pullback. The Russell was weak early in the week, but that did change. So you had this up day here on Monday. Overnight here on Tuesday, Bank of Japan lowered their QE by a tiny amount. The yen exploded on that news and the bonds dropped. That knocked the S&Ps down. But that, of course, didn't last. Buying came in. As we get steeper interest rates, we get financial stocks that are starting to move up again because of hope for the higher yields bringing bigger earnings to them as they can get more money for the money they loan out. So the financials led the market up in a big way here on Tuesday. China was this news that there may be a policy change coming of buying U.S. treasuries. The bonds moved down sharply, as does the dollar. Gold starts to pop, and you get this kind of big overnight decline. But then as airlines, banks, and retail start to lead a rebound, the only down day of the year so far is right here. And you could see, for traders, it was basically an up day because the market just, you know, continued up. ECB minutes come out here. They were more hawkish. That's not a surprise. PPI down 0.1%, but year over year up 2.6. That's hotter than the Fed wants it, doesn't it? So here you have another day where they move up almost all day. So you had that Monday, Tuesday, Wednesday, Thursday, and Friday. And Friday you had this drop here as CPI was hot, 0.3%. Facebook comes out and says they're making some changes, and Facebook gets hit. So you get this decline, but that doesn't last. Even Fed Dudley and Kaplan warning on overheating doesn't affect the market in any lasting way, and the first 2 hours of the day bring in a ton of buying, as you could see. And again, we're seeing the markets move up, this time with the Nasdaq, which got hurt first with Facebook news, getting bids coming in Amazon and Apple and other stocks, and that lifts lifts the market the whole day. And the retail stocks really helped. Had some pretty good sized gainers in retail stocks here today, with even lowly little Sears up almost 10% on the day, and Dillard's and other retails like Kohl's and Nordstrom's are all gaining like between 4 and 8%. So the retails really helped in here, and they got a really nice bounce, as you can see, and helped the market get up. So retail, you know that when they're buying the brick and mortar retail stores, that they're really searching here at the bottom of the barrel, because the prospects for a lot better earnings, and they're, well, forget about it. If they're not, building good online sales lines, then forget it. It's just not going to last. A lot of them moving up to resistance, and I'll show you some of that as we move further on in the show. The stock market for the week, we saw the S&P 500 and the Dow up just under 2%, right around there. The Nasdaq up about 1.5%. Facebook adding to it being a laggard. Also, Apple underperforming during the week, but the Russell moves up to about 2%, and the microcaps, that's the IWC, up over 2%. So that's really where the driver came from. Bond market, we saw the 30-year up about 1.5 points, 10-year gains 4.5 basis points in yield, up to 2.55% right now, where we could see a 3% number in interest rate sometime later in the year. The dollar had a pop and then drop, as we very much expected, losing about a penny on the week at an important level right now. I'll show you a bunch of these things in the short-term view. I'll show you gold and oil in the short-term view, all interesting in there. Gold up $18 on the week. It drops and then comes back up, all of that following the patterns we were suggesting. Silver, the same thing, but silver ends down on the week because it had a much steeper drop to the upside. Oil market up strongly, $3.40 on the week. Natural gas absolutely exploding and changing what was a negative looking pattern into something that looks a lot more bullish. But oil has come all the way up over 64, and take a look at on the daily chart. You'll see a gravestone doji yesterday, Thursday, sorry, and that when you get those, beware. It means that something is dead, and it might be this rally. So that is a look at the all this information as we end the first segment. Have a little piece of information to share with you right here, and then we will get to the best and worst stocks for the week. Just watch this. You'll find it really interesting. I want to take just a few minutes to show you our Level 3 membership. This is really an amazing offering that we have. We look at 400 symbols every single week and do analysis on them. And then that's a huge universe to trade. We call them down to the 80 best traded symbols. That's the widely held, the best optionable stocks, ETFs, and futures. 80 symbols. And our Level 4 members get those charts every single week. But some people don't want to have the charts, and some people would like to have the information in a clear format for them to see. And so we have created a table that our Level 3 members get. Of course, our Level 4 members get this also, in which we put all of our analytical information on this one table on all 80 symbols. It's an amazing, easy to use table to look at. The symbols that are on here are all of the ones that you look at probably on a daily basis, and we rank them in 3 different time frames, plus our option bias indicator. I'm going to show you that table right now. So I'm going to give you some idea of what this looks like as our members receive this each day and what this all means. This table is a really comprehensive look at all of our analysis. So you can see in here, when you look at, let's just pick out Amazon right over here. This is the our long-term analysis based on our formula for long-term momentum. This is our intermediate term analysis based on our intermediate cyclical analysis. This is our short-term analysis based on our proprietary indicators for short-term market condition. And this is our option bias indicator, a phenomenal indicator which shows you when there is positive momentum and a likelihood, or negative momentum, or a likelihood of a reversal coming. And I'll show you what that looks like also. So here in the case of Amazon, this is a long-term bullish, you can see that. And then this P3 reading right over here says it is the most positive based on our cycles. Short term it's positive, and our option bias indicator says that your option positions will be favorable to have them in a long side bias. This is the best, strongest reading that you can get. Our Boeing indicator, you see that little downgrade, has now gone down to P2, and that's because after all this long rally, it has become slightly overbought. Hence, our P1 indicator in the cycles, which says, it's still rising, but it's getting kind of late. When you look at Apple here, long-term positive, intermediate term, notice the yellow and P1, that says that the cycle indicator is starting to turn over. In other words, there's risk that the advance that Apple has had is ending. It's still positive over here on the short term. One more thing to look at here, look at American Airlines. First of all, notice the end there. We put a note, and every time we put in a new note right over here, we then indicate that what we see that has changed in the reading. And in this case, our option bias indicator has gone to P1 orange, which says a high likelihood of a reversal. It's been moving sharply up, so it has positive momentum, but it is at an extreme and likely to reverse in the next several days. In a choppy market, the P1, this indicator, P1 or N1 orange, is giving us 75% probability of a reversal within a couple of days. In a trending market, it's more like around 62%, and those are still phenomenal numbers. You can see we do this and update this every single day. Again, if you're an investor, you'll be looking at these two right over here. If you're a swing trader, you'll be looking at probably all of these. And short-term traders will be looking at the short-term and option bias. So it's just something for everybody. As I scroll down, you can see in here everything that we cover, and we do put in trade setup. So you can see in here that, if you look at January 9th, we had what we call level 1 long setup that occurred in the GDX market right over here. And you can see our indicators, well, the long term is neutral, but we have positive all the way across right over here. So we put in that setup here on January 9th. And when we take off a setup, when we say it's no longer fitting for an entry, then we gray it out. You can see right there. So a ton of information. There's all 56 stocks and ETFs. And then as we look down here, you can see the 24 different futures and future ETFs that we do a few of in there also, and you can see those indicators in there. You'll note that we have recently been very bearish in the bond market. Note these readings in the bond market right over here, all these red numbers, and that has been absolutely fantastic. We've been bearish in the soybean market. It's been lower. You can see that going on there, and we've been bearish on the dollar, and you can see N2 negative on the cycles, N2 negative on the option bias indicator, which is slightly oversold. And there you can see there's just incredible information on here. And this is all of the work that we do on our charts all put onto this table. It's amazing. I'm going back up to the stocks just so you can get an idea in here and how it even helps you understand the market. In that, look at all these stocks, the long term. There's only a couple of them that are still long term negative. One is Schlumberger, one is Pan American Silver. And if you look in here, here on the cycle indicators, right here you can see all of the positive to neutral readings. Only one that's negative right there is Intel. I'm sorry. Also Avago. Those are giving you N1 readings, which are mildly negative on the cycle pattern. So, you know, if you were long Avago as a long-term holder, you would say, okay, it's still long-term good, but it's in an intermediate term correction that's likely to continue. If you would see the shorter terms in here turning red on Avago, then you would have some sense that, well, the correction is accelerating on the downside, and that the momentum of the shorter term is also joining the intermediate term. So there's just a ton of information on here, and we put out these setups maybe a couple times a week. When the market gets choppier, we'll be putting out more setups. During the time of the more choppy market, we were averaging about 62% favorable entries to about 28% unfavorable. It was phenomenal. We're slightly less than 2-to-1 right now on our favorable setups to unfavorable, which is still fantastic. Our last 10, for example, you could see that on our front of our webpage, was 9 favorable setups, 5 unfavorable, and 1 that was neutral. So it was 9-to-5, still sticking somewhere close to that 2-to-1 ratio that we want to be. This is an unbelievable offering that we have here. You could see all of the amount of information we put in here. Can you imagine doing the cycle work that we do on 400 stocks, culling it down to the 80 best traded stocks, and then putting that information for you every single day onto this chart? It's incredible. This table will really help you a lot, especially the option bias indicator, which is phenomenal. You can have this to try if you wish for half price for a month. What do you get with the half price? Well, you starts out, all of our level 3 and 4 members can write me emails, a reasonable number, to ask me questions about this or market conditions or trader issues. So we allow 3 a week as far as that goes. You'll be getting this table and our with all of our rankings in long-term, intermediate-term, option bias, all of the notes, the setups, all of those on this table. You'll be getting a notification each morning when it's sent out, so that you know to take a peek, and you will also get our library of over 250 trader videos. What an amazing thing. And I'm going to offer you this for a month to try in this trial for $43. I don't know how you can avoid doing this with all of this information. There's a little bit of a learning curve as you get used to it. You can ask me questions, and I think that you will really love having all of this information. You want that for half price, $43. Write me at slim@askSlim.com. Ask me for the special 1-month level 3 trial link, and I'll send that to you, and you can begin the fun of seeing all of our great information. Thanks for listening to that, and now we get on with the rest of the show. All right, best stocks for the week. We're going to take a look at quite a number of them here. Retail stocks, some big jumps in there. The biggest gainer for the week was Dillard's, DDS. Again, I'm skeptical of this for the longer term, as we've had these big moves in here that have really, to me, set up the potential for some downside retracements again. Take a look here as we look at Dillard's right here. 19% on the week. Wow. Analyst upgrade this one. And Zacks makes it a strong buy. At this point, I think it's really come a long way. Generally, when you get these type of patterns right in here that you can see where you have that big advance and you give up most of the ground, then you get up to the resistance levels and fail. And you can see right over here it gets up to this major or intermediate 61.8% level right there. I believe that somewhere in this area in the next couple of weeks this is going to roll over and fail and then decline out here into May. Of course, that's when I think the stock market's going to be correcting into. So I think this is there's a lot of risk in here after this big gain in Dillard's, and I certainly would not chase it at this level. Target is on my list of riskiest stocks for the year. So far, that doesn't look like it's accurate, as it has a big 13% gain on the week. I don't believe that there is anything that's changed significantly in the outlook for this company. They're still well behind Walmart and well behind Amazon in being able to develop any online sales. The grocery sales strong, but it's a very tough market in there. And I really believe that this stock is going to have a hard time by this multiple cycle resistance that we can see right there. So just as Dillard's gets up to a big area, so does Target. And these are areas that we could see the markets move down. Macy's up about 9% on the week. Also, it's at resistance. Kohl's had a pretty huge breakout of an important level. That might have a little more room to go. And Dick's, DKS, that one moving up about 7%, and that's also at a resistance level. A quick look at Teva again, because that's a stock that we really saw a bottom coming in back some weeks ago, and you know, people writing me how well they did on that. Now it's gotten really to an important level. It has a big up week again, 16% on top of big gains, and I think this is the one we played take the money and run the other day. You could see this resistance zone. They still have pretty big issues, and I believe that this stock is going to fail there. So it comes from the point where we saw the bottom forming by that little green box that you can see there, which highlights that morning star, all the way up here to a double on the stock. So that's only in 2 months a double. I think this is a tough area for it, and I think the stock's a sell here. How do you like that? Take a look at the drillers as we switch over, and you can see NBR is what we're going to look at. And this to me looks like a resistance area. Also, you know, the oil's strong, driller's strong, the rig count's really not growing. I don't think that they're going to do anywhere near what the stock price rises are talking about, as we have this stock moving up from $5.50 to over $8. This is a pretty good resistance area, but you could see that, you know, our patterns in here are suggestive of further rally, maybe getting up into the high 9s. I guess that's still some decent place to where it could go up to. And again, this is a spot where we might see it stop for just a little bit. And then it's got a little bit more room. 14% for the week in here. I don't know. I'm a little skeptical on that. Here's NE. You could see it moves also up strongly on the week. 12% Noble Corp. And it gets up into this resistance zone. Also, you could see that we have it projected up to this area of the top of the resistance zone near a big fib target number right up there. So that gives it the possibility of putting on maybe another $0.50, 70 cents. But that might be it in Noble Corp. It had made a beautiful base. We talked about that when the base had formed. What's a base? Just so that you get an idea. Well, this is a bear market. You don't really need to be told that, right? And then when you get a cycle after that big decline that ends up higher than it began, and you get the breakout above this level, you're cleared to go. And that's a base with a positive breakout, and you know, a pattern that now has done really well. So we could see it getting up to the mid 6s, probably at best in here. That's a look at Noble Corp. The home builders have done very well. It doesn't matter that interest rates are going up as long as people have money. But homes are getting very pricey, and we've got to wonder whether this rally in the home builders is going to stop soon. I think it will. And in the meantime, KB Home, which you might have called a little bit of a laggard in there, just exploded this week. Take a look here, and you'll see the really pretty cyclical rhythms in here. The rhythms essentially the heartbeat of the market, and you can see the upward moving rising phases and the minor declining phases that we saw. Well, there was one in here that wasn't bad, which was a pretty good decline, but then you had that breakout right above that level, and once you get that, it turns positive. This is a monstrously strong pattern right in here. We call that a right-hand translation, and only 2 weeks into the breakout, we could see this one going a bit further in here at KB Home as earnings beat. Analysts upgrade this stock. And the slim ribbon in here, well, it kind of tells the story. Here you see the slim ribbon turning positive on a breakaway gap right there. You see that green upside arrow? Let me get a little closer in there so you could see that breakaway gap. right there. And then the stock never looked back. See the slim ribbon in here? It stays positive the whole way. As it rides up that slim ribbon or the 13-day moving average, all of these volume bars are green because of the upward momentum. But now you get that big day in there, that giant, and then you got this harami. So you got to think that that was an exhaustion gap. What's harami? It's Japanese for a body inside of a body. What's a body inside of a body? A baby. So that's what harami means, and usually when you get that, the stock has had it on the upside with some exhaustion. So I'm thinking that KB Home is going to take a rest in here, and maybe the entire group that we're looking at. Let's switch over and look at the airline stocks. The airline stocks have turned into much stronger patterns. We turned quite positive on them, and they have exploded to the upside again. I'm going to show you again the nature of and the importance of looking at momentum in a second. First, we'll look at the weekly cyclical patterns, and you'll notice that there's a dashed line in there. That's this cyclical rhythm right in here, and we saw the low come right in here and said, boy, that looks like something has changed. And on December 21st, we said alternative cycles really look like they're taking over, and since then the stock has exploded to the upside and gets through these resistances really easily. You could see the 61.8, which we pulled out of there, which exploded through the 78.6. I think it's going right up here over the $83 number, to tell you the truth. This looks really strong. Take a look at momentum in small cycles. This is incredible. Look at that beautiful cyclical patterns that you can see in here. What does that mean for new viewers? These are idealized cycles right in here, the cycle brackets, and these are how the cycles resolve themselves based on the upward momentum. And you can see in here almost no declines during the declining periods and surges to the upside. United Airlines, 3 monstrous days in there. As analysts have upgraded this stock, it has reached on our option bias indicator a level of extreme overbought, and that says to us that this is likely to give some pullback in here, and so we have it flattening out, seeing the potential for coming down. I love this stock. I think it's going to 83 or better, and I just look for a small rest period here in United Airlines. Delta, take a look at this one as it explodes also to the upside. United gains 11%, Delta gains 7%. Look at, we have colored phasing in this one to help you understand what we have. Here's the group that we look at right there, and here is the cycle patterns in here, and you will note the importance of what I'm going to tell you right now, that these long rising green phases give you big advances. Well, most of them. This one, week 1 right there of this advance, important fib number right over here, but we can see that the next fib extension target is right up over there. That's our target zone in this as we get to the 78 to 100, and we could see 63.5 or higher here in Delta. These are very bullish looking patterns in there, and you can see in Delta this positive looking pattern right in here as the momentum has been strong, and Delta just another one. SAVE is the other one we're going to look at, SAVE, and you could see similar pattern really exploding to the upside. This one up 9% on the week, and you could see there's only a little bit of time for that correction that's pointing to right there. So all of this time period rally, that's all this much. It only leaves this little time period for a little correction. Buy this dip. That's what I can tell you in Spirit Airlines. I think that you get a dip here over the next couple weeks. You can see our projection. It is going to do a lot better, and very related to the airlines, of course. When they're doing well and have a lot of money, they order a lot of new planes, and there's no secret that Boeing has been doing just unbelievably phenomenal. 8% more on this as it moves strongly to the upside. It has been a monster mover. Here's a big long-term extension zone right in there. Extensions are resistance, or they can be targets, and just plainly move right through them. And when we get into this kind of a zone, you've got to believe it's going to correct, and you can see that we're anticipating a decline in here through March. So we think it's going to roll over and it's going to give some ground in there. Look at this daily pattern in here, as it is just not giving any ground at all, and the slim ribbon turning green right over here with the stock at 263. It's now at 335, so just immense momentum in here. And we kind of look at this support zone in the maybe 30 points lower as the potential for the corrective area, but it's not given any kind of real ground yet. And Boeing just a monster, another 8% on the upside for the week. So that is a look at the best for the week, and I'm going to show you right now the worst. All right, worst of the week. I don't have a lot to show you, to tell you the truth, when you get these big upside markets. And the stocks that have been bad get worse. I mean, that's basically what it's been. Some of the really weak-looking stocks have accelerated to the downside. GoPro has got a lot of issues, besides the fact that analysts have been lowering their targets on the stock. Then now this week a lawsuit came up. This has been an ugly stock. Our pattern has suggested that there would be a decline into around February 1st. Look at that. It's nearly perfect. Now, when we see something like this, that big hammer that's formed in there, what is a hammer? A hammer is a candlestick where it goes down in a sharp way and then comes back, and then the body is about half or less the size of the tail, or the tail is twice the size of the body. So we actually think that is the bottom. You know, it's close enough to the timing, and if 504 is not the low, then 504 is going to be the tested area that it might test, but we think it's going to be turning to the upside. No, that's just a massive assumption. When you see in here, looking at the momentum in here, it's just absolutely ridiculous. But this is very typical. So you see the momentum turns negative here with the stock up here at about, well, 960. It falls all the way to $5. I'm telling you, slim ribbon, one of the best momentum indicators you'll ever see. Look at the volume here. This is the definition of a exhaustion gap to the downside, and that's why we think the bottom is in place. Now, you can get a rally up here into the slim ribbon, as you could see, stops it all the time, right? And that's probably in the sixes. It probably plays around, rolls over in the high fives or sixes for a while before the bottom is set in here. And believe me, we're not talking about any turnaround in this stock unless they have some miracle new products that they come up with. This is just bad, but we think we're getting into an area where it's going to be bouncing in there. I'd buy it in the high fives if it pulled back, and then when you make some money on it, you give me a high five. How do you like that? Pandora, another one that has been a sick puppy. This is horrible. What's horrible about it? Well, it's gone down, right? I mean, from $15 all the way down to $4.44. But I'll tell you what else is horrible. So you see this rising zone, you get a rise, and in a bearish market, you get big declines. No significant rises and big declines. You know, they go a few weeks and then big declines. That's how bear markets, bear stocks work. One of the worst things that you can see is doing one of these, which is a low tight rectangle, and then breaking down below the rectangle. That's just a horrible pattern. They got huge competition out there. This stock could be a $2 stock. So the low came when it was supposed to. The rally came, it went nowhere. The breakdown is at hand, and this is a horrible looking stock in Pandora. I don't think it's one really worth taking a shot on, to tell you the truth. Another one that's been horrible and remains a problem is Under Armour. Now, it got a bounce. You could see the big bear market in here, and it may actually be building a base. But this is not an area that you want to buy at. 34-week moving average, resistance zone, the likelihood that it's going to decline into March. This is a place for it to stall. it would have to do significantly better to turn positive on our work. So what it looks like to me is that it's kind of stalling here and roll over. Under Armour down as analysts cut the target, and their downgrades, and 5% on the week on the downside in Under Armour. It's better than Pandora, which was down 7%, or GoPro, that was down 8%. One of the stocks that we have loved has been Micron. DRAM chips really strong. They've been really well adapted to the mobile markets and the big demand out there for chips. They've done incredibly well, and the nature of this pattern in here is giving me pause. As the stock is down 5% on the week, now Nasdaq is up 2% on the week, right? And this is in what we call a bullish rising area, a bullish rising phase, but it's not rising in a bullish rising phase, or at least not anymore, and that gets to be worrisome to me. Here is the Micron pattern that you can see in there. Now, there's that fib extension zone right up over there where you could see it stopped once. We thought it would get there again, but it's not. You could see it has a down week in here, and these are, if it gets down under the low of this pattern, under 39.20ish or so, that's going to be a breakdown. That would be horrible. It's not bad right now. It just didn't go anywhere when it should, and we're looking at the half cycle correction right in here that you can see, and that comes down into maybe second week of February. It needs to hold above those lows and then get into gear again. Micron down 5% on the week, and we throw up the caution flag on this one, which has been one we really liked. GameStop is one we really did not like. We thought it would fail. You can see all of these downward cycles. Incredible. We talked about this one being essentially a value trap. What is a value trap? Well, it's a stock that seems very low in value. In other words, well, something like a 6 PE. They're projected to earn $3 this year, and they're trading at 17. How do you figure that? That's like a 5.5 PE, but they have problems. And now they're going to take a $350 to $400 million write-down related to technical issues or issues with the iPhone 10, and they're just not doing it. And you can see this 34-week moving average has been the resistance all the way down. You can see 1, 2, 3, 4 cycles in a row that had lower lows. That's that downward trend. And now you can see that it is failing in here, and that is not a pretty picture. So I think it's a value trap. The stock could easily continue this downtrend and get down to $13, $14. Look at this right in here. I mean, this is really important when you look at the daily pattern. So it had established positive momentum in here, and then broke out above this 89-day moving average. But now you see on this gap, that's an abandoned baby right over there. That is like an island, but it's one day. And then this kicker pattern as it moves down in a big way. Big volume that you can see in big gaps either start something or end something. What you have here is a breakaway gap on the downside. And this kicker pattern, the abandoned baby, this is your breakdown that you can see right over there. This has a lot lower to go, and that's why I'm telling you 12, 13, 14 is reasonable on the downside. Our projected low in here comes somewhere around in April, so GameStop to us looks like a really bad one. The last one we're going to talk about in here is Facebook. Facebook down almost 4% on the week. This stock, which has been just spectacular, and 2 billion users around the world, and they're changing the face of Facebook. It may be going back to where their roots are, and that is more about personal pages and personal sharing and a lot less about business. Isn't business what pays their bills, and isn't that what drives earnings? So the stock takes a hit. Facebook, on that news, it wasn't enough to weigh the market down and get it to move in any permanent way to the downside, but Facebook's got a bad pattern in here as we get what we call a dark cloud cover, and that happens right at that extension zone right in there. And here's your intermediate support zone right in here. If it gets under this level at about 177, it's going to start giving warnings that there is a decline coming. And you can see our projection over here. Why do we have that? What will it look like? Well, notice the half cycles right in here. You can see that. Pretty interesting, right? Well, what does that mean to you? You don't know anything about cycles unless you've been studying them. Well, here's how they have resolved on these charts right over here. It's nearly perfect. As you could see, each of those half cycles making up the full cycle. This peaked. It says that this half cycle is peaked and rolling over, and this doesn't bottom till like late February. So there's 4 weeks of downside risk in here. So we would expect it to come down, get some kind of a rally in here, and then come down harder. That would form a head and shoulders top, right? Which is normally formed by cyclic action. So Facebook giving bad signs in here. We think it's finished. It's like they, are making this change and, well, biting off their nose to spite their Facebook. Anyway, that doesn't look great. Here you can see on the daily chart, it's been positive momentum. And look what happened in here. You see this day, it collapses underneath all of that support that we had in there. It hasn't turned negative on momentum yet, but you see the high volume in here again. Big side, downside gaps, either end something or start something. This is starting something, as you can see in here. You can see this trend that goes right across here, and there you have, what looks like it's just about a breakaway downside gap, but maybe not quite yet. But that's the beginning of something, and we can see Facebook having a lot of downside risk in here, and we think the top has been seen in there, and maybe that means something for the Nasdaq, as this one is in some danger. It's going to try to bounce, and I think it's going to be a sale if it does. So that's a look at the best and worst stocks for the week, and I'm going to come right back to you with our short-term view for the coming week. All right, short-term view for the coming week. We're going to look at 5 different sectors in here, where we look at the light crude market, the dollar market, the euro currency. Got to get all my notes in place in here. The dollar, the euro, gold, silver, the bond market, and the stock market. We've changed our way that we do this by just a little bit, because we want to have better balance in our analysis. I was giving too much balance, too much to the cyclical patterns, which were being skewed by the amazing upward momentum. So we knew that we needed to give momentum its fair amount of focus and improve our balance. As far as momentum goes, in other words, the stuff that was in strong momentum going up, or the stuff that was in weak momentum going down, that was 100% this week. I mean, that was really the dominant factor, and that has been the case. As far as cyclic and pricing patterns, we're about 60% on the week, as we got the dollar, euro, gold, silver, the bond market, all correct. Light crude we thought would come down. It didn't. And the stock market, of course, we thought was going to have a small down week, and it just monstrously accelerated to the upside. So that's what we got right and what we got wrong. And now let's take a look at the coming week at what we're looking at here. We're going to look at daily charts. We're going to have again, momentum and cycle focus. That's really what we're looking at, to try to get the best feel for how to project the markets going forward. And here is the light crude market. You'll see that right in here. And I mentioned on the beginning of the show the gravestone. You can see that gravestone right there, and then the market ticking up again on Friday. Gravestones are important. What they mean is that there's really sellers above the market. So it opens near the bottom, it rallies, and then it sells off. And those are pretty good signs that you've reached a level when the market is peaking. And you can see that we have this projected to peak. We're actually going to look for, because momentum is still strong, and that's the key, we're going to really focus on that. The slim ribbon is telling us that the momentum is still strong. And until that changes and you can break under the slim ribbon, then you're not going to be in any kind of serious danger. So we're going to look for, you notice this period in here, this seems to go out to about January 29th. So we're looking for a topping in here and then a rolling over in the next couple of weeks. We see a test coming of the 61 level, but that might be in 8 to 10 days. So we're projecting a rolling over, and then 8 to 10 days we're going to likely be seeing it get down below $61. So we see that topping, and we think that's an important way to look at it. Strong momentum, modest decline out there ahead, and we're going to see, I think, the next week some rolling going on and potentially some downside action. I mentioned natural gas. It really has turned stronger. Our members, we're going to update that natural gas chart and send that to you because it really has changed now, and we warned there may be a change coming in there. So natural gas really helping the market in there. We're going to look at the dollar DXY now, and I want to go out to get a little better alignment here on the 2-year daily and then come back. There you go. Look at the breakdown in here. I mean, this is a horrible cycle violation. We warned that potentially was coming. This is the, I'll get you a little closer so you can see it. So when you look at the cyclic rhythms in here, you can see that there was a nested bottom right in here. And then the next small cycle is said the bottom right in here. Once you break that low, it accelerates to the downside because, well, that's a key breakdown on the short term. We can see that the dollar in here looks like it might tick up a little bit, but then we think it's going to move down. So we think upticks fail, and you can see in here momentum turns negative over here, and that brought this acceleration on the downside. Little zoom in here for you to see. Here's that negative momentum right over there, and then it moves strongly to the downside after the slim ribbons start to widen, and this acceleration right in here. So we're going to look for upticks to fail, continued downside movement. It has broken the 91 support already, so 89 is a risk in there, and that is where the longer term supports are. We talked about 89 long ago and then kind of bailed on the idea that that was going to happen because of the strength of this rally right in here, but then it accelerated down and broke the important lows, so it's really in bad shape. The opposite of that is the euro currency. If you were a subscriber, you caught a beautiful trade in here on the euro because we caught the bottom right in here on the euro and said it sure was likely to be moving up. And look at the size of that upside move. Part of this is because Germany actually formed a government. They formed a coalition government, and they thought there was thoughts that they would never be able to do that with the government they had here. So you can see in here the upward movement, the support buy zone right in here, the upward movement. We didn't put the buy zone in here. We should have. And then the next cycle moving up. So beautiful upside pattern. We got this one really right. The dollar correct. Also, this has more upside potential to it. We're going to look for the potential of getting up to 123 in there in the near term euro. As you can see, it just blasts to the upside in here. And the British pound also followed it with a very big upside move. Momentum extremely strong when you see that, as it is inversely extremely weak in the dollar. The gold market in here, we were looking for a dip in the week and then coming back. Well, what did we get? We got a dip for the week and then coming back. We wanted it to get down under here, 1302, to hit our buy zone. The low for the week was 1309. So it didn't quite give us the perfect upside advance. Now, if you look at here, we have two projections right in there. One of them is getting up and stalling here at around 1340. The other one is getting up here to around over 1360, maybe 1366 in the gold market. We could see that in the next couple of weeks. Just as we said that the dollar market might have a little dip but a little pop, but then you sell it because I think it's going lower. If you get a dip in here in the gold market, I think you buy it because I think it's still going higher. So a good solid look in gold. We got this correct. The same thing for silver. We thought it would be a choppy week, down and then up. The silver market did the same, except that this midweek sell-off was so big that it just barely got back to even for the week. It actually might be up a penny or so. But a lot of buying coming in there. You note this is the first week up right over here in this cycle. First weeks don't top. I mean, it's only like up a 3% probability. So that says silver, if you get a downtick in there, you should be buying that one also. Now, I want to note that platinum is very overbought. We're getting an OBI negative signal. The odds are in the next 2 or 3 days, it's going to reverse. So that might give us some downticks in here in gold and silver to be able to buy. The bond market we talked about quite negatively, and we had believed that it was still had quite a number of weeks to move to the downside in the bond market, and the bond market did accelerate to the downside. Now this is the ZNs. We're at we believe we made a temporary bottom in here. You see there's 2 hammers right there. That we think is a temporary bottom, and we think we're going to get a rally in the ZNs and the ZB. We're looking for a rally week that fails in these sell zones. More people like to trade the ZB, so I'm going to switch over to ZB, and you can see in here, this is our resistance sell zone up here. I think the best spot is to look at around 5104 up to the 61.8 at 5119. That's probably the likely good entry on the short side in here. But as low as 50.20 right over here is where you could start thinking about it. Now you see it's moved up close to that already, so we're not giving it a lot of credit. I'm going to look for this 5104 number, which is only about 3/4 of a point, as the place to think about your short entry. You'll note here this dotted line, this dashed line, that comes way down over here, and we don't think the correction ends or the decline ends until you get to the bottom of that time period. So we're looking for a rally into here, a decline as we have it projected, another rally, and another decline. All of these we think are going to be sell periods in there, and right now we're in a bouncing period. So we think we get a bounce into this sell zone, and then it rolls over, and we think that sell zone is exactly what we called it, a sell zone. So we don't think that the bond market has got much to go on right now. Momentum still remains negative in there, and that's the key. Even this big bounce in here could not change the momentum, which remained negative through that whole period. So you can see all of these green lines right in here. That's showing you all of this positive momentum that was going on right there. But once it gave ground and turned negative, it continued to move to the downside. So momentum, momentum, momentum. You're going to be sick of hearing me say momentum, but that really has to be the focus. And believe me, when momentum starts to change in the stock market and it turns negative, it's going to be meaningful. In the meantime, it's been sickeningly strong because it makes for few opportunities for traders and great opportunity for the buy and hold investor types, longer term holders that have done spectacularly well. Take a look here at SPX, the S&P 500, and as it moves up to an important level that I told you it would not get to. Up to this major fib confluence area right up there. There's a fib extension confluence. This comes off of 3 different cycles right up over there, and I honestly didn't think it had a chance to get there because I thought, you know, often these things are targets, but when you have that much going on, it would have a hard time. But it didn't have a hard time, and now it's important. I said this week would be a down week in the stock market, which again was not right. The lengthening of the cycles continue to happen, as happened here and here and here, and excuse me. This is really the spot where we expect it to peak, and you can see in here that our projection is for it to come down out over this way and into the January 25th or 24th, 25th date is really what we're looking for. So we see this in the S&P 500. We see this in the Nasdaq. Momentum super strong. You could see that as that 13-day moving average continues to give it the support all the way up in the S&P 500. This is a 2-week period out there. We're going to be looking for a pullback over the next 2 weeks to the 2740 to 2728 number, and that is a bullish comment by me. Falling down to those levels is bullish because that is a minor decline in here, and then we'll be looking for something major after, well, coming out in here in late February. But this, we're just looking for this minor drop here over the next couple of weeks, and we expect it to round over and to move down this week. So we're going to call it a down week in the face of upward momentum, but only a minor down week, as it's going to be hard to keep the buyers from coming in the markets because they're so attuned to buying. Here you could see the Nasdaq, the same thing. The target's in here over the next couple of weeks, 66.28 down to 65.77. Again, there's a fib confluence area right up over there and a big 161.8. So this should be the area that it rolls over also, and no selling. Even here late in the day on Friday, when the market was starting to come down in the last hour, the buyers started to come in again. And right now we are 30 minutes from the close on Friday, January 12th. That is a look at the Nasdaq. And if you want to know about the VIX index, take advantage of the specials that we offer, because I did a really interesting video on Thursday comparing the VIX and the S&P 500. And there is a strong message of something changing in the markets coming in just the next couple of weeks. So while I say I think we're going to get a decline and then another rally and a minor decline, there's a volatility change that's due. And you're going to want to see this because I do a great historical comparison. And it talks about the potential for the S&P 500 actually having a correction. Believe it or not, I would say that. That's it. You got to go watch that video. Take advantage of the special we're offering. Make sure you follow me on Twitter at askSlim. Also join our YouTube channel. And make sure you give me thumbs up when you watch this video. And if you've got a thumbs down to give me, make sure you tell me why, because we always want to be better. We want to learn from what you bring us, and we want to keep bringing you better content all of the time. We try to do that, and you can see the amazing content that we bring you, me and my whole team. And it takes a whole team to be able to deliver this content, and I have to pay them money. So really, you can support us to keep bringing this by becoming a member. I want you to be so careful because it is so crazy out there, and I'm always wishing you great trading.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been